Hey everyone, welcome back to Corporate Decoder. Today QuRE.D.U just filed an 8K announcing its IPO, and I am seeing a classic SPAC strategy play out. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing tells us about how the company raised money and what kind of shares are now available for trading. So QuasarEdge Acquisition Corporation, or QuRE.D.U as it is traded on the New York Stock Exchange, has officially gone public. This is a big moment for any company, and for a special type of company called a SPAC, or a special purpose acquisition company. Think of a SPAC like a company with no business other than to find another private company and merge with it, taking that private company public. So this report is basically them saying, we've done it. We've raised our initial money and we are now official. Now, what kind of shares are we talking about here? This filing lists out what they've issued. We have units, and each unit is made up of one ordinary share and one. Right? These rights are interesting. They give the holder the chance to get a piece of another ordinary share later on. The ordinary shares themselves are also listed, and then the rights separately. All of these are traded on the New York Stock Exchange under the tickers QREDU, Q.R.E.D., and QREDU respectively. The company is also checking a box here indicating it is an emerging growth company. This means they can take advantage of certain flexibilities in reporting for a period of time. They've also decided not to use the extended transition period for new accounting standards, which is a common choice for SPACs. This is where the core story of the IPO comes into play. QuasarEdge Acquisition Corporation, as they call themselves, the company here, pulled off its initial public offering on the 16th of April, 2026. They offered 10 million units with each unit priced at $10. That means they raised a cool $100 million from the public. But that is not all. Right alongside the IPO, they also did something called a private placement. This is where a specific investor, in this case Aspira Capital Consulting Ltd, which is called the sponsor here, bought an additional 270,000 units. They also paid $10 per unit, bringing in another $2.7 million. So where does all this money go? A significant chunk, $100.5 million from both the IPO and this private placement, is being put into a trust account. This trust account is essentially a safety net for shareholders. It is meant to hold the money raised until the SPAC finds a target company to acquire and merge with. If they don't find a deal within their time frame, this money is supposed to be returned to the shareholders. The filing also mentions an audited balance sheet, which is like a snapshot of the company's financial health right after these transactions. This important document is included as an exhibit, which is basically an attached file to the main report. And speaking of exhibits, we have a couple of key ones here. Exhibit 99.1 is that audited balance sheet we just talked about, showing the financial picture as of the 16th of April, 2026. And then there is Exhibit 104, which is the cover page in an interactive data format, useful for computers to read, often called inline XBRL. Finally, the report is signed off by Qigong, who holds the position of Chief Executive Officer. This confirms the report has been officially submitted on behalf of the company, dated the 22nd of April, 2026. Now, looking at this filing, what is the story? This is a typical SPAC launch. They've successfully raised their initial capital from the public and a sponsor. The big question for any SPAC, and therefore for QuREDU at this stage, is what company will they acquire and when? The money raised is sitting in trust and the clock is ticking. SPACs have a limited lifespan, usually around 2 years, to find and complete a business combination. If they don't, the money gets returned to investors. What I am watching closely here is the sponsor's involvement. Aspira Capital Consulting Ltd put in money at the same IPO price, which is a good sign. It shows they are committed and believe in the company's ability to find a suitable merger target. However, the success of QuREDU will ultimately depend on the quality of the target company they can bring public. Many SPACs have struggled after their initial IPO, with the acquired companies not living up to expectations. A notable detail here is the structure of the units with ordinary shares and rights attached. This is common in SPACs and can offer investors additional upside if the merger is successful and the stock performs well. The rights essentially give you a stake in future share appreciation. The risk I am watching is the uncertainty of the eventual merger. SPACs are inherently speculative because you are investing in a company before you even know what it truly is. Investors need to do their due diligence on the target company once it is announced, not just on the SPAC itself. What I am actually looking for is the announcement of a merger target. That will be the next major catalyst for QuREDU and give us a much clearer picture of its future prospects. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.